live, right?
Yes, we thank God we are.
We're alive.
And that's true.
That. Yeah. Is for those that are watching and joining, Mitch joins me every month to talk about real estate, which is a fun topic to talk about. Now, Mitch's role as a mortgage loan officer very tightly connected to what it is that I do as a real estate agent, and it impacts both sides of the transaction. If you're a seller, you should know what's going on the lending side of it. If you're a buyer, you definitely need to know what's going on the lending side of it.
Yeah, exactly.
Thank God we've got Mitch, so we don't have to be the experts. Mitch gets to be the expert, and you can just walk through. But let's get some information so we know enough to ask the right questions and maybe structure a deal a little bit differently. So
exactly.
Mitch, go ahead and introduce yourself. Give us a little bit of your background for those that may not know you.
Great. I appreciate it. And good to be here again. It's always fun to reconnect and talk through the state of the market, which is usually what we do connect on, because I think it's most appropriate for people who want to learn and listen. So I'm Mitch Friedman, been in mortgage banking for 35 years. I'm 45 years old, so I started when I was 10. I have been in Colorado for 30 years, roughly, and been doing home loans here for that long. I recently joined a company called CMG Home Loans. We're a direct lending mortgage banker. So that means we do everything internally as the actual lender. We don't broker the loan to any other companies to provide the financing or the loan program selections. It just allows me to work with a team of people within the company to be able to provide the best service and get loans through very quickly. And today we're going to talk about the state of the market, but I think there's going to be a few nice things that my company offers that is helping people be able to actually create transactions that they didn't think they could from an affordability standpoint, whether it comes to having cash to buy a home for down payment. Love what I do. Like you, we've been doing it a long time. We love working with our clients. We love the handshakes and the hugs at the closings when everybody thought I could never buy a house, and then they do, and they're very, very happy. And that's why we do it. That's the reward we get for fulfilling our soul.
Yeah, it's pretty fulfilling when you're at the closing table and somebody was able to get a home purchased. That's the next phase in their life, or they're a seller and they're closing that chapter and being able to move on to whatever's in their journey next, right?
Correct.
Pretty cool to be part of all of that. For most folks, the largest financial transaction they may make in their life is around real estate, and it's cool to be part of that.
It is cool, and we have to be sensitive to the stresses that go along with it and the complexities of it. And as you said, we need to be the expert in both of our sides of the transaction. And if there's something we don't know or we're unsure of, we both have resources to go to get the right information.
Yeah.
And that's crucial.
Yeah, without a doubt. So the title of this is this the time that you've been waiting for as a buyer, right? The market has been really crazy the last 2 years, but it has been a heavily favored seller's market for the better part of the decade.
Right.
It's been heavily favored towards being a seller versus being a buyer. So is this that time, right, that folks have been waiting on that says, hey, when the market starts to change, that's when I'm going to be a buyer? Is this the time they've been waiting on? And I think that's an interesting conversation for us to have today.
Right. And I agree. And you bring up the perfect comment, and that is this I'm going to wait to buy when it's the right time, which is what we heard quite a bit when the market was escalating so fast. And now I think we're there. The difference is from an interest rate and a mortgage standpoint, things are a little different now than they were then, but it doesn't mean it's not the correct time. It just means it's a time that you have to take into consideration everything that's available to you as a buyer and make sure you're making good choices with what's available. And always comes down to affordability. So I live that life every day with my clients. Is this comfortable? Is this affordable? regardless of the price of the home, regardless of where an interest rate is on that any given day. If it makes sense and it works, the question then becomes, do you want to continue to pay rent, or would you like to start owning your own home and start putting your money to work for yourself, as opposed to paying rent on a monthly basis, which I think we talked about this last time. We say people are paying 100% interest when they're paying rent because they own nothing and they're getting sure that you're getting a roof over your head and shelter, which is crucial, but at the same time, it's not yours. And so to me, getting in, unless it's not affordable, is always a decision to be made that typically I would say yes, if it makes sense to do so.
Yeah, when we look at the typical net worth of folks in this country, 2/3 of it is wrapped up in their real estate.
Mm-hmm.
That's a massive percentage. And real estate's a proven path for building wealth over time.
Yep.
So, let's kind of frame this question a little bit, define our terms.
Okay.
I think it was Socrates that said, if you want to have a discussion, define your terms, right?
Yeah.
So we're speaking the same language. So is now the right time to be a buyer if you're expecting to pay 2015 prices, 2009 prices? No, that's not a reality for us. The market has not changed that much. So is it an advantage right now because we have much longer days on market than what we've been having? We're seeing more price reductions on the market. We're seeing more opportunity to negotiate as a buyer than what we've seen in quite some time.
Right.
Would you say that that's pretty consistent in your experience for what we're seeing in this market today?
Yes, it's very consistent and very accurate. And it's the moment that, again, buyers said to us a year ago, I'm going to wait till the opportunity comes where I can actually negotiate on a purchase price and not have to pay $25, $50, $75, $100,000 more than the ask price. And the opportunity is here. It's here. There's nothing. We're seeing it. We're living it. Our clients are writing offers that way and getting accepted. And it's here, which is why we're talking about this today.
Yeah. So, we're looking at the opportunity to negotiate. Now, I heard this, and I think I shared this with the interview we did with Brenna. It's kind of like you went to Vegas, Mitch, and I don't know, Mitch, are you much of a gambler? Okay. So Mitch, you went to Vegas, you went in with $100, and after a couple of hours, you're up to $500.
Mm-hmm.
That's a pretty good turn, but what's the adage, right? You never walk away when you're on a heater. Okay.
Yeah, I don't gamble enough to know the cliches, but I'll go with that one.
I heard it on a movie. I know enough to know that that's probably bad advice, right?
Yeah.
You walk out on top, but you're not ready to walk away. So after a couple more hours, you figure, okay, I'm not up to $500, but I'm up $300. So went from 100 to 500 to 300. You're still up $200.
Right.
And that's what our real estate market is essentially doing right now. It went double digit, 20+% appreciation for a couple years in a row. And now it's starting to come down, but it's still far ahead of where it was. And my guess is, Mitch, and I think this is a pretty safe bet, it's going to be higher in another 15 or 20 years than it is today.
I would agree with that because it is higher than it was 15 or 20 years from past years.
Yeah.
So yes, we always think, we do have that, being that we've been in real estate a while, we always think, gee, I wonder if this is actually going to go any higher than it is today. And it always seems to.
Yeah.
So,
hey, we set a record sales price until that next home went for sale.
Exactly.
Right. So the opportunity to negotiate is probably prime. Then the values for the home have dropped a little bit from where they were maybe this time at the beginning of the year, right? So they're a little bit lower. They're still above where they were this same time last year.
Mm-hmm. So
we believe they're going to go more expensive or higher in value in the future. So Mitch, here's the $1 million question, right? Or the asterisk to it, but the rates, right? The rates are so much higher.
Correct. That's correct.
Yeah. So, quick question: what did interest rates do today?
They actually went down.
Okay.
Yep, it went below 7% today, and they were at 7.5 and 7.75 2 days ago.
Yeah.
Crazy! It's crazy volatile, and it's proof of in the pudding. Very much like if you're a stock investor or have money in a 401k, they always talk about timing the market and how impossible it is to time the market. Whether you're a person like you and I who probably dabble a little bit here and there, or someone who that's their full-time job, they never know what that is, so they that market.
Yeah,
So
timing the market, I think, is a fool's game.
It's very difficult, and I think in real estate, and that is, you don't really need to time the market. You need a house to live in, you need a roof over your head, and you want to invest your money in a place that has a of being favorable in the long run. It may not be the year or 2 or 3 that you own the home, but it could be the next 4, 5, and 6 years.
Yeah. So, Mitch, I think we're getting you frozen a little bit. Are you still there?
I'm here.
Okay.
Yeah, I see it coming in and out. But
So here's the question, and I asked you kind of point blank earlier in our conversation because I'm hearing this from economists. I'm hearing this from other lenders. I was on a national call yesterday, and they had a gentleman who's won the Crystal Ball Award for forecasting from Zillow. Everybody that I'm talking to believes that the interest rates are going to go down in the next 12 to 24 months.
Yes, that's correct.
So it happens when things start to go into a recession, right? It also tends to happen during election cycles, correct?
Correct. They want to keep those that are in office want to keep the pressure on rates down because it's feels better for people who want to buy properties, et cetera. Cost of borrowing money is just cheaper. So it's a better political play for those in office than to have escalating rates, which is really the challenge right now with people in office.
Yeah.
But it also, if you look at some graphs as well, in the history when interest rates have escalated this much in a short amount of time, it does show that it about back off quite a bit. And I'm a big happened over the years. So if you were to pull up a chart of 30-year fixed rates over the last 30 years, you'll see it. It's very evident. Goes up, comes back down. Goes up really fast, comes back down over a longer time. They always go up faster than, but I think we're in one of those cycles. Into 24 months, we're going to see the tick down. Now, I don't think we'll be back at the 2.5% level that we were. Didn't know what to do yet at that point. But I think we may see it come back into a level that is much more comfortable for everybody, and it'll bring it. Now, what comes with that, as you know, is more demand, and more demand with supply is what's going to either drive prices up or down again. So,
yeah, the interest rates dropping where they did, down into the 3s, the 2s is some of what contributed to the inflationary environment that we had, right? With the Fed artificially keeping rates low, you got a big influx of stimulus money from the government, and they stimulated the economy to the point that inflation followed, right? So, we look at where the interest rates are right now. They've dropped a touch, but they dropped a touch today, which is a great position to be in. the buyers aren't always quick to pull the trigger on it, and the sellers aren't always quick to adjust a price, right?
Right.
So we look at the homes that are on the market now for a week, 2 weeks, 3 weeks. We're up to about a month average days on market. The interest rate just dropped a little bit. You saved maybe 5% of the purchase price based on where the payment calculation ends up, right? We talk about affordability.
Yep.
Interest rates, direct correlation to your daily cost of ownership. So that ends up saving some of the money. You're the only one at the table negotiating with the seller. You can kind of dictate your terms a little bit more. You can get sellers a lot of times to pay for an interest rate buy down, a temporary buy down, a 2-1 buy down. You can get things negotiated on inspection that you haven't been able to do for a couple of years. Last couple of years, I saw way more. We're not going to do any inspections,
Right.
and tell me when I've given you enough money, right? We're just let me know when to stop. And now today, homes have been on the market a little bit longer. You're getting the opportunity to negotiate at a better price than the neighbor who bought just 3 months ago. Interest rates are potentially going to go down. We all believe there's a very high likelihood that that's going to happen. So you're in a position really where you're holding a lot of the cards in this negotiation process. This may be here in Q4 of 2022, the absolute best time that we've seen in some time to be a buyer.
Exactly. Well, you hit it on the nail. So one, this typical time of the year is where we oftentimes see a little, not in the last 12 years because it was so crazy. We always thought it would slow down around the holidays, but it's really where you have your very serious sellers who need to sell for whatever reason they need or want to sell. And you have very serious buyers for the same reason. And I think this, but now you're going to have sellers who are open to, like you just mentioned, negotiating. And I think this quarter now, time for a buyer to be looking at properties that meet their needs and see what they can negotiate to. And with sellers paying closing costs, with them paying in addition to that, if it makes sense for them. Comfortable for buyers to where they weren't 4 or 5 months ago. And so I agree with you. We're in a really positive 90-day period that could be very fruitful for a buyer. Yeah, and a seller too. I mean, you got motivated buyers. That's what a seller needs also. It's just a little different times now from a standpoint of what sellers can expect to get for their homes, and negotiation is normal.
Yeah, the economist that I was listening to projected, he believes March 2023 is when interest rates are going to start to drop again. And when the interest rates are going to drop, the money's a little bit cheaper. Buyers will naturally be able to pay more for a property. And there's a problem that we've been experiencing for the last number of years that still hasn't gone away, Mitch, and that's just there's not enough homes for the number of people that live in the Denver metro area. We'll just focus on this, but nationwide we got a housing shortage problem. So because supply is low, and people still want home ownership, and I don't think that demand has gone away. So March, April, May really might be back into a scenario we were in 2017, 2018, 2019, where it was still a pretty strong seller's market here in the Denver area.
Mm-hmm. Yeah, and it is. And I just recall one of those years, or a couple of those years, there was a couple seller concession.
Sorry, Mitch, I think we're losing you a little bit. Oh. You remember from those couple of years?
For 3 weeks. Am I back?
Are you back?
I,
I think we lost you. We remember you from the last couple of years, or those couple of years.
all right. Am I back now?
You're back.
Okay, great. Okay, thanks. What I was saying is there was about a 3-week window of time in those years where it became a buyer's market all of a sudden. And it was just this unusual, it was like, oh my goodness, all of a sudden the seller's taking a lower price and paying closing costs. And then 3 weeks later, that was gone. Like, what happened? We just, and it's because rates were coming down and people who said, oh, rates are down, come in and like, oh, God. But it still comes back to the opportune time. We're used to saying to make our offer the most palatable offer for the seller. And today the buyers have some time to think about it, negotiate, and have a much different experience in buying a home.
Yeah. It's a great opportunity from a negotiation standpoint. So, right, if you're able to negotiate and get so many of your terms, and the interest rate's a little higher today than where it might be in 6 months, 9 months, a year, you should still be in a pretty good position to turn and refinance that property. Right. So your cost of ownership, it's never going to get more expensive, right? It's not going to get more expensive. The interest rates, unlike rent, right? The landlord gets to increase that rent every year. Interest rates aren't doing that on you on your home ownership. So then you can turn around, refinance, lower your payment, free up some of that capital, and you were still able to negotiate those repairs. You still didn't have to fix and replace the furnace on your own, or replace that sewer line because the seller said, hey, if you don't want it, we've got 5 other people here willing to pay for it and pay for it on their own.
Right. Yep.
So,
exactly. Yeah. So for sure, we said it a few times, it's a great time to consider buying for all those reasons. And the financing options are still the same that were available for sellers, meaning they didn't have to do any negotiating. I mean, we're still seeing people use down payment assistance programs and getting in. Colorado Housing Finance Authority down payment assistance program, and the seller paid 100% of their closing costs for them. So it was affordable for them, and they were able to close on their first home ever, and they were so thrilled and excited at the closing. So those traditional standard, they're still there. They're resources that we have to continue to look at to help make it so where buyers can buy a place. Now that they can do, again, back to the negotiation and have their closing costs covered for.
Yeah.
Quickly to what's advantageous for our clients. And having a seller, if they can, pay those fees for a buyer to help them lower their monthly payments for the first 24 months has been a really great lifesaver for a comfort level for a new buyer to buy a place and ease their way into payments with the hope, no guarantee, the hope of maybe refinancing. We have a rough connection today, Matt.
Yeah, a little bit. We got to fix something with the internet.
I'm on a hardwire today too.
Well, I don't know. Somebody's goofing up something somewhere, right? Mm-hmm. So the easing in the ability to buy down that interest rate, have the seller pay for it so that you don't have to. You got to save that extra money for a couple of years. And here's our disclaimer, right? We don't know for sure that the rates are going to go down in 2 years or a year. And we don't know for sure that the house you want, you're going to be able to negotiate on. Maybe they priced it low to start with, and the good deal was getting the house.
Right.
We don't know what's going to happen in the future, right? This is all just watching historical patterns. What do we believe is going to happen? And, is it there? But your reasons for buying a home probably haven't changed, right?
Yes.
You're getting married and you want to move out of your parents' basement. That probably hasn't changed regardless of the interest rate.
Right.
You were maybe a young couple. Now you're starting a family. You've got the two dogs, and you're going to have 2-3 kids. That probably hasn't changed your need for a bigger place. Unfortunately, somebody passed away, and that real estate was owned by them. It's going to need to be sold. People still buy and sell real estate around life events. That's probably not going to change anytime soon.
Right? Correct. Yep.
So pretty sound investment, pretty sound opportunity right now. I believe it's a fantastic opportunity to be a buyer. And Mitch, I think from our conversation, you agree.
Yes. And I want to highlight the big part, and I think this is crucial, and that is people are not having to pay $50, $60, $80, $100,000 over list price, over asking price right now. And that is a huge benefit because that added so many term that we all seem to have forgotten already is the appraisal gaps. That I haven't heard those words in a couple months.
Yeah.
And so it's if somebody was out looking to buy real estate when it was so wild and crazy and didn't, and now they're looking again, they're not hearing those words and phrases. What they're hearing is, wow, we might be able to offer something a little lower. Wow, there's actually a property I can look at 1 or 2 times in the next couple, 3 or 4 days and not worry about it being gone immediately. And it's just an overall better experience. And for that, it's worth considering. Other times there might be, but I think if we look at that craziness versus today to me is much more comfortable to deal with and being a buyer.
Yeah. So overall, several distinct advantages right now to be a seller. We look at the prices, the values are coming down a little bit from where they were, right? So you're getting them a little bit cheaper than you would have a couple of months ago. Because they're sitting longer on the market, you're able to negotiate your terms a little bit more. What fixes and repairs do you want? Can you get the seller to negotiate to buy your rate buy down so your payment's lower? And interest rates dropped today, I believe, and we believe, right, from our conversation, they're going to get cheaper next year, the year after. So you can refinance, drop that down. Worst case scenario, the rates don't do what we think it's going to do, or it's not advantageous at that time. It's not like your payment went up, right? If you were comfortable of where the rates were when you closed, you're good to go. You're in a great position.
And there's still appreciation going to start taking place again as well as that takes place, and over time. So and you will not get that when you're renting a property.
Nope.
And what I'm hearing from landlords is the cost of them owning their rental property has gone up. They typically pass that along to their.
Yes. As those that are watching, as Mitch has gotten cut out on the volume, right? If the cost for the landlords is going up, they're going to pass that on to the tenants.
Correct.
Yeah.
And so, it's interesting times, as it always is in our industry. It's either wild and crazy, wild west as a seller, or now on the buy side, it's so much more comfortable. And I do say those who are listening, or anyone you and I speak with about buying a home or selling a home, that it is a very opportune time to consider both. And I could justify both positions as we talk about with facts, and then obviously affordability comes into play and making it make sense for both parties to consummate a transaction. But there's a lot of business still being had. Business hasn't stopped. There's still not enough inventory, as you said earlier, and there's just more, and we just haven't been used to having more. So it feels like there's a lot more, but there really isn't. We're not even in a typical normal market anyway. Normal market, what is 4 months of inventory?
4
roughly?
months. Yeah. To balance the playing field, we need 4 months. And our absorption rate, how fast homes are being sold when they come on the market, is still not to 4 months.
No. Was it still 30 or less? 30 days or less. So a month and a half. Yep. So if you can get in, buy, and negotiate, and it's affordable, bottom line, then for sure worthy of consideration. And that's what we're here for. And that's why we get hired, is to provide that information for our clients to make good decisions based on facts and realities of their financial lives. And I get questions all the time. Would you do this? If I was your daughter or son, would you tell your daughter or son to do this? And I answer very honestly in that moment in time, once I know their story and their financial history, whether it makes sense for them. And oftentimes it's without a doubt I would, because I know we can, if need be, refinance if it makes sense. I know none of it is short term. I would tell my daughter, know that you're not going to move in 2 years and make a lot of money. That's just not the nature of the market today. But you've been paying rent of $2,700 for the last 2 years. Do you want to keep doing that? And she finally got a full-time job and she's doing these things. And she's like, heck no, I don't want to do that. I want to own my own property. So that's how I present it to clients when they ask that question.
Yeah, it's, my overarching statement is, well, it depends, right, Mitch? It depends on your situation. And that's where the one-on-one consultation really matters. Does it make sense to sell your home right now? We had to tell 2 sellers, I don't think based on the numbers you need, it makes sense to sell right now. I think it makes more sense for you to rent. That's a decision that they get to make, right?
Mm-hmm.
So.
Yeah, exactly.
Awesome.
Yeah. Well, so what feels like a rough market is actually an opportunistic market. And that's really where those people who are out willing to look and kick tires that are within their price range are going to find opportunities that may not be there in the next 90 to 120 days.
Yeah. If you can have faith when everybody else is fearful and they're running away from something, it might be the great opportunity to step in and buy, right? Yep. And I think Warren Buffett said something along those same lines.
I was just going to say that. Yes, he did.
So, and he's done well investing.
Yes. Yeah, exactly.
Yeah. So.
Yeah, no, it's good times to consider for sure.
Yeah. Well, Mitch, as always, thank you so much for your time in investing this with me, right? So that we can share this knowledge with those who have questions and want to know what do we think about the market? What is the actual data saying? And, what do we think we're looking at? Is it safe to be a buyer? Does it make sense to be a seller?
Yep. And I think the facts will speak for themselves. And then my side of things is to present numbers that make sense. Yours is to present facts and information about how we can negotiate on a property and what the market's allowing now. And together, our client gets to make that decision, and then we take it from there.
Yep, absolutely.
Yeah. Well, thanks again. I always love talking about the market and the state of the reality, because you and I see it changing minute by minute, and it's nice to have our pulse on that so that we can adapt with our clients quickly as needed.
Yeah, for sure. Well, again, thank you, Mitch. We'll catch you again next month. If you want a specific topic, you want Mitch and I to cover something, make sure you reach out. Let me know what you want us to discuss, and we'll get it up on an upcoming interview.
Sounds good.
All right. Thanks.
Bye, Matt. Thanks. Have a good afternoon.
Yep. Bye.
Jack. Bye-bye.